guys, hope you're having a great weekend. I wanted to create a video that addresses two important topics, and I want to just provide some educational content this weekend. So, the first topic that I want to discuss is how to identify high probability trading setups, and the way that I do this is I'm always looking for what I like to call points of confluence or points of conviction. So each point of conviction, meaning each piece of evidence that is in favor of my trade thesis, I call a piece of conviction. And the best trade setups, the ones that are most probable to succeed just by using, just statistics, are ones that have the most pieces of conviction lining up simultaneously. So I'll go into that in depth and how I identify those pieces of conviction, and how if I see opposing conviction, I'm very careful, and oftentimes even if I have even just a little bit of conviction against my trade, in order to reduce any risk of that trade being a loss and to keep myself selective, I'll actually avoid that trade. So we'll get into that. That'll be a pretty deep discussion, and I have several examples up above. You see all these tabs on my trading view is an isolated example that I want to discuss today of a high probability trading setup, or one that wasn't so high probability, one that failed, and then we can discuss that as well. So the second topic we have in this video is managing your losses, how I use dynamic stop losses, and what I mean by that is I never set a hard stop, just because oftentimes, candle wicks will be the main reason that people get stopped out early in their positions. And to avoid that, I do have candle closes as my stop criteria, and those can be dynamic based on the actual trade itself. So there's a lot to cover, so let's get started. First of all, I want to discuss the chart that I have here on my screen. So this is the S&P 500 ETF, SPY. This is the most commonly traded ETF for options, and one that I like to discuss. So we're going to look at the 5-minute chart. You'll see a script on all of my charts. So just to give you some background, that script is the Zach attack indicator. So you're going to see my screen adjust based on this algo that I coded with Zach. So if you're curious, that's what I have on my screen. If you have the SMT indicator, you'll also be able to follow along. So for the for the purpose of this video, that's what we'll be using in terms of our script. So let's get started. Okay, you know what? I'll just leave this here. So the first example is going to be the S&P 500 on Friday, right? So this was just last Friday. So let's take a look at a setup here, and then I'll show you what I see, and we'll actually kind of annotate this as we go to give some more educational value. So the first thing that I'm seeing here, right, is we have this nice uptrend based on this green EMA cloud. We have a slight attempt to break up above pre-market high, and then a huge rejection on massive volume, right? We moved down a little bit, making lower lows. We have a pullback, and then we have a rejection here of VWAP, and then a close below our demand region. So when I'm looking at something like this, the first thing I like to do is simply just mark my pieces of conviction, okay? So what do I see in this trade that I like? Well, number one is a rejection of VWAP, right? And that rejection of VWAP, now this is not exactly an evening star, right? But it's somewhat indicative of an evening star bearish reversal, right? So we have the rejection of VWAP. We have a bearish engulfing candle. Let me expand this to make this easier to read. Okay. Right, we have our bearish engulfing candle. Right, you see rising sell volume on push down. We have our short signal. And another important piece is a close below double demand zones, bearish EMA cross. I mean, I have 6 pieces of conviction just by looking at this single setup, right? That for me gives me the opportunity to go short. This is a very good example of a push down, slight retracement, rejection of a heavy resistance area, close below that area, setting us up for continuation to the downside. So another thing to note here is when I set my targets, right? So we're going to kind of cover the two topics simultaneously, right? Because when we have trading setups, we inevitably will set our stop loss. So there's a couple of ways to set stop losses, right? There's hard stops, meaning I set my contracts to automatically sell at minus 20%, okay? The issue with this is that, let's say, for example, you have one of these wicks, right? You're short here, and you say, okay, I'm short on this close here below this resistance, and 20% stop loss, and I'm looking to target, the next push down. Well, boom, this wick gets your stop loss out, and look, it dumps, and you miss out on a ton of profit. Whereas if you just kept your stop because you knew this was a heavy area of resistance, if you just kept your stop a close above that area, you would have succeeded. So This can work against you in some cases, of course, because oftentimes, that candle might be a huge candle to stop you out and you waited until the candle closed and ate a bigger loss. But the idea here is if your win rate is higher than your loss rate, and you even significantly higher, and you have slightly larger losses than your wins, that's okay, because your success rate on your trades is much higher than your failure rate. And that's important, right? If you have a 50 to 50 win rate, if you have 20% as your average profit on the 50% of your wins, and then 30% as your average loss, it's a losing system. If you have 50% of your trades are successful, your average winner is 20%, and your average loser is 10%, you're still going to win over the long period of time. So, vice versa. If you have a 70% win rate, your average winner is 20%, but your average loss is 25%, even though your average loss is higher than your average win, because when you extrapolate that data over time, you're winning more than you're losing, you still have a successful, profitable system. And that's kind of the idea behind this, right? I'm hitting more than 50%, usually around 70 to 80% of these scalps. So even if I get a slightly larger loss due to a candle close past my, my stop area, over the long time, those losses get fizzled out by the wins. So just want to give that for background. Anyway, so we have all of these pieces of conviction. We've seen that the last time we closed below these zones after we rejected them, we made a pushback to this strong support region here at 508.66 or 65. So that is my target. You can write this all down if you annotate. So our target is going to be at this point it is essentially low of day support. And then our stop, here's where I like to be dynamic with my stop, right? So there's a couple ways to do this. So if you are a more, you want tighter losses, then you can use the EMA clouds as your stop, or even one of these supply zones. If you want your trade to breathe, you can use VWAP as your stop. So me personally, whenever I take one of these long or short signals, if we are close enough to the EMAs where I can stomach that loss, meaning it's going to be 15, 20%, maybe a little bit higher, then I'll set a close above the EMA clouds as my stop, okay? Because these EMA clouds will actually dynamically move as price shifts. So once we drop down, you'll see my stop is essentially trailing my my position down, right? So this is nice. We get another retest and rejection of this supply area. This gives me continued confirmation of this play moving more to the downside. And then again, retest and rejection. You'll see each time we're trying to get through this area of supply, we are failing, and we're making lower lows, and then boom, we get our target is hit, and as expected, a little bit of buying pressure at this low of day support. So that is the first example of how we can get a ton of pieces of conviction for our trade thesis, and then use that to give us confidence, and then we establish targets and stops based on the setup. Okay, let's take a look at this second one here. So we have 2 and 1 here, right? So we have a good example of a signal that failed and why we would not have taken that signal based on opposing conviction. And then we'll talk about this bounce setup here that's in demand. So the first idea is let's take a look at this setup. So, right, so what's nice about this setup is we actually have a few things in our favor, right? So we have, let's see, we have price, right? So we closed above VWAP. Bullish engulfing candle right here, and you can say that we closed above supply zone, and we have bullish EMA cloud flip. Now let's try to find some opposing conviction, and really there's only one piece that I'm actually concerned with, and it's pretty important, and it's the fact that we have an incredibly strong resistance above us here, and that resistance is pre-market low. So try to find reasons why you shouldn't take the trade and see if those reasons are strong enough for you to pass on the trade. So opposing conviction, let's take a look at this. Opposing conviction, number 1, pre-market low resistance. Okay, number 2 is chopping. Actually, you know what? There's not really too much chop here. This is not bad. I would say the main thing is pre-market low resistance, and then lack of significant volume on buy signal, right? So it's really just we don't have. If you look at the volume here, it's nothing out of the ordinary. Whereas when we look at the previous signal here, you can see a pretty visible increase in volume. Where here it's really very similar. There's not anything too crazy there. And really the main thing here is this pre-market low resistance. So you'll see what happens is we try to get through that resistance, we fail, we have an inverted hammer close below pre-market low, and that has even more volume than our original candle, and we end up getting stopped out there. So again, like I said, our stop is a close below the EMA clouds, and so you can see here stopped out below EMA clouds. So that is how we do our stop, right? If you want to do a hard stop, maybe you do a 20% stop, that's okay. But for me, once we close below this area here, below the EMA clouds, I would have been stopped out. Now that is the stop criteria for the long and short signals. Let's talk about this PR setup. So what are we looking at here? Well, we're looking at first, let's take a look at the nature of the area where the signal is happening. Take a look at how many times this demand zone was respected previously, right? The last 4 candles all wicked through that area and held 1, 2, 3, 4 times, right? So now we're getting another of the same thing happening here, but we also know that now at this time we're getting somewhat, you can call them equal lows, whatever you want to call them here, but we're retesting this low here, right? Grabbing some liquidity, then we're closing back inside this area, right? So here we're just kind of bouncing around, and then we get this nice push down, big support area, push back up, and we form this nice bullish reversal candle, right? We notice that the volume is very nice, right? It's been gradually rising, and then our peak volume is at this reversal candle, showing us that buyers are stepping in. So let's go ahead and start marking our conviction. Number 1 is bullish reversal candle. Number 2, PR signal. Number 3, bounce on, you can say equal low support, whatever you want to call it. Number 4 is rising volume. And number 5 is close inside demand. So if we take a look at opposing conviction, well, the opposing conviction is that EMA's still bearish, and then we have some resistance above. Okay, now for the PR signals, what you actually want to do is you're just looking to scalp into the clouds, but you'll see this is a pretty big reversal off this one. And then for our stop is close below bottom of candle wick / support area. So that happens to be on the same support, right? But I usually use I'll kind of like mark something on my screen like, hey, that's the bottom of the candle wick, and then we're just looking to scalp up. And then you can see there is the reaction there. The same thing happens later where we pull back into the EMA clouds, where we pull back through into this demand region, that holds, and then we rip up higher. So that's a good example of a PR signal. Let's move on to the next one here. All right, let's take a look at this short signal. So what is our setup that we have happening? Well, number 1, I can see a pretty clear area of resistance here where we reversed, and then we kind of had this little push back into pre-market high, and we rejected pre-market high, closed below these zones, tried to pull back, and then what's important is these rejection candles, and we also form a bear flag, just like that. So let's go ahead and actually write down these pieces of conviction. So conviction, let's go down. We have bear flag setup, right? We have a close below VWAP, EMA clouds, and supply. We have short signal, volume validation, and short signal, bearish EMA cloud flip. All right, so that's a lot of conviction for my short trade. Right, and we can just take a look at the next level of support down if you want to scalp there. So we can just look to scalp to this next level down, and our stop loss is again going to be a close above the EMA clouds. So stop is close above EMA clouds. Now this is nice because this time we're entering right at the actual EMA clouds. So we don't have much room above here. It gives us a close risk there. We have a very close stop. And so we're not going to get stopped out on too much loss if this fails typically. And then let's go ahead and see how this works out. And there you go. Target is hit. And look, we have this marked as our support area because we did bounce here earlier. So you take your profits there. And then you can actually see we end up retesting the clouds and get in the supply area. rejecting them twice, and then dumping to the downside. All right, let's take a look at another example. So this is a nice breakout example. Let's take a look at it, just identify the scenario that's happening here. Well, first we have this tweezer bottom push into this demand region, right? That's where we end up forming a bottom, and we end up pushing up into supply here. Initially we reject supply, but we end up forming this bull flag and then breaking out to the upside here on this long signal. So if we look at what criteria we have in our favor, well, here we have the conviction is a reversal off demand, bull flag continuation, breakout above supply, bullish engulfing candle, bullish EMA clouds, and volume validation. All right, so that is what we like to see. And if we take a look at our next immediate resistance, you can see that we have this rejection level on pre-market high, or actually in pre-market. So that is our target, and then of course here we're going to make our stop is close below EMA clouds. All right, and then let's see how this plays out. All right, an initial pullback candle, and then here we go. We get our target, and then we go ahead and close position here. If we want to leave runners because we closed above that resistance with some volume, we can. And you see here, we get a little bit pushed to the upside, but it's pretty wild price action here, so it was a good idea to just close out at the next resistance. And that is the idea behind scalping. Even though we did eventually move much higher, as you can see, well, let me make this accurate. We did move higher from our stop area, from our take profit area. It didn't come without a pullback, a deep pullback into the clouds, and then a move back up, and that happened over a long period of time. So because we're trading short-term expiry contracts, it may not have even been enough to get us a higher profit than our initial close on this position, and we had to endure all this headache. So let's move on here to an example of where I would not take a trade because of the conviction not being there fully, there being something opposing here. This one actually ends up working out, but this is not something that I would typically take. So we look at the short signal, and in essence, a lot of the criteria are there that look great, right? So the conviction here is bearish engulfing candle, right? We get a close below pre-market high, huge volume. Now this is towards the end of the day, so the volume is not, it's expected. Bearish EMA cloud flip. And I guess that's probably all I would give it there, right? Because now here is the opposing argument, right? So opposing argument is one, that this 508.58 support respected. That was a big pivot point, right? Because we saw last time we respected this support, we had a nice bounce to the upside, right? So I'm aware of that. And then another piece of conviction, I forgot to save that, but number one is so 508.58 support is going against this trade, and then VWAP support tapped and respected. So here I would be very weary, right? I would think maybe we retest and move back up, but if we have respecting two supports like this with a little buy side, a little bit of upward pressure wick there, I'm not taking that trade. And you might want to use this resistance as your stop, or even a resistance like lower if you want to use this as your stop. But either way, I'm not in that signal. Now you will see we had a little push down. This support is respected again, and why we didn't want to take this trade. And we did end up pulling back up here. And if you used a close above this as your stop, would have been stopped out. If you used the EMAs as your stop, you wouldn't have. But either way, you avoided that huge bounce if you stayed out. Now, in the end, this ended up being somewhat of a flag and then dumping way below VWAP here for a nice profit. However, because there was some opposing conviction there, I wouldn't have taken the trade, and I didn't take the trade, and that's why it's important that we do some further analysis on any kind of signal or setup to make sure that we are looking for the best risk to reward. All right, now let's take a look at a PR signal that didn't necessarily work out too well. All right, so here we get a PR signal after a significant move up. This was a beautiful bottom PR here that we talked about earlier that ended up going all the way up right past pre-market high, and then we get some rejection here of pre-market high. We get this PR signal, and per the PR signal criteria, we immediately define our loss as a close above the wick, right? So stop is close above PR signal top wick. Our target is always the EMA cloud, so target on the PRs is the EMA cloud. And then let's look at the opposing conviction here. So the opposing conviction is that we closed above pre-market high. So, or I guess we could say that the opposing conviction is pre-market high support plus opening range support. That's a double support region. Now let's talk about what the opening range is. You see, if we draw a line here at the top of the opening candle, that is called the opening range. You'll see that the opening range top here, the higher end of the opening range, was acting as support there. And then we know that it's right below. We're above pre-market high, so we are careful. We may not necessarily want to take this PR short because we are still above these key support levels. And you'll see that those levels held nicely, and we ended up getting a bounce to the upside and stopping us out since we closed above our stop there. So that is an example of a PR signal that just had some opposing support underneath it, and so it didn't get the follow-through that it wanted to have going back to the EMA cloud until after you were stopped out there. All right, let's take a look at this long signal here. So you can see that we have a bounce at this area of support. We have a pivot and a reversal. We have a breakout and flag. Sorry, somewhat of a wedge or a flag there above this demand area. It was previously supply, now acting as demand, right? We have this nice flag continuation pattern, and then we have a close above a significant resistance, and that gives us our setup for the long signal. So we have conviction here, right? Bullish engulfing candle, breakout above 504.69 resistance, volume validation, EMA cloud flip, right? And then we have it's technically a breakout above supply. So it's looking good. Now immediately we're going to look for our overhead target. Right, for this one, I would actually probably use the EMAs as my stop, but an alternative stop is actually going to be this strong support level. Because it was a strong resistance, now it can act as a strong support level, and if you want to use that as your stop, you can. And then we're going to target the next overhead resistance, which happens to be in line with VWAP. That is our target there, and let's see how this plays out. Boom, retest that strong resistance flipped into support, that holds. You get this nice candle here on more volume, and then boom, we tap and we are all out. So that is an example of a good setup that you can use there. Moving on, we have an example of a PR setup. So this PR is one of my favorite kinds of setup. We have an absolutely monstrous run, right? So we got the long signal that we were talking about earlier. We continued actually running way past VWAP into this area of double supply. So we have a double supply rejection, right? We have an exhausted trend. We have a top pressure selling wick. We have volume validation. We have all of this going on, and we have a PR signal. And really the only opposition here is that the trend is in the favor of the upside at the moment. So we have our PR signal. We mark it. We designate our stop as a candle close above that PR wick, and we are looking for a push back into the EMA clouds. However, since we have a significant support here at pre-market low, we would ideally want to actually take our profits there. And if we get a little bit of continuation into the EMA clouds, that is a better, if we get that, that is a nice addition to the setup. Look at that. We retest that same resistance, reject it. Nice bearish candle on volume, bearish engulfing, and then boom, look how we dump right into our areas of support and even further. So, good PR signal there. Now let's talk about a PR signal that didn't work out so well and why. Again, this is very similar to a short signal we looked at earlier, or I'm sorry, a long signal we looked at earlier, where we actually end up forming the signal right under an extremely important level of resistance. So the indicator is not intelligent enough to understand something like this. It can't interpolate the difference or the distance between a signal and a pre-market low, right? So what it doesn't have any idea that that's there, but us as humans, we can visualize that we have a strong level of resistance there. So this is actually a decent PR signal in itself if you ignore pre-market low. So conviction, right? So we had a retest and hold of 502.22 support, strong buying pressure, wick, and we, you know what? It's actually not the best, because let's take a look at the opposing here, and I just realized there's a huge lack of volume on this candle here. So I can tell you some opposing conviction that actually would be very important. So the opposing conviction number one is below strong resistance, right? And that's pre-market low. We also have decreasing volume on pullback candle. And for me, this is typically indicative of a potential bear flag. Now I want to explain this a little bit more in detail. Oftentimes what we have with bear flags is we'll have a high volume dump, and then you'll see us start to pull back a little bit, right? And if you keep your eye on your volume, if the pullback has some dried up volume, low volume, it's usually kind of a fake bounce. It's just, people are taking profits, or some people buying a little bit. Unfortunately, those who were buying are going to get dumped on, but it's usually a big push move, big push down on heavy volume, consolidation and slight uptrend in a flag channel on low volume, and then again a dump on heavier volume once sellers come in. In this case here, we actually do get that scenario where we end up continuing to the downside. We're going to see volume likely start to pick up here. Yep, and that just shows you that they were just drying up the volume for a big dump after this here, and so that PR signal did not work out, and you actually would have eaten up a pretty decent loss there. As we know, the stop criteria is a close below here, and so you would have gotten stopped out here if you took it. So that's just a kind of like a good way of understanding some of those signals. A good example again now of a failed short signal is here, and this one is pretty obvious if you don't see it. We got a short signal, but you got a short signal into some very strong double demand, so you would not want to take that as, so you kind of just have to use your own understanding of the zones, understanding of price action and trading in general, and you can kind of understand where the higher probability signals lie. If we want to talk about some examples where you don't necessarily need a signal, a lot of that is actually playing retests of a trend, right? So, for example, you don't necessarily need a signal here, but what we can do, oftentimes observe, is when we get these pullbacks into the EMA clouds, namely the 21 EMA, if we have some conviction there, we see the EMA cloud hold, and we close back above the EMA clouds, I will often like to scalp to the previous, the pivot point of the existing trend. So what do I mean by that? So for example, here we have a retest and hold of EMA cloud, and then you'll see bullish hammer candle, and then we have a close back above EMA cloud. So when I see that happen, we also have a strong uptrend. When I see something like that happen, I get a pullback into the EMA cloud, I see it hold, and then I see it close back above. I like to draw this level of resistance that stems from the initial push into the EMA clouds, and then I will take a scalp position into that same level with a stop below the EMAs. And you can see here it worked out pretty nicely. Again, here we had this push into the clouds. This time we were supported not just by the EMA cloud, but also by a demand zone, and we closed back above it, and again we could scalp in that same area. Happens here, and you'll see it happen quite a bit. So that is a good way to play the trend, the EMAs to the upside when we have a strong uptrend, and it actually works vice versa to the downside. See if I can find an example quickly here. We need to find a strong bearish day. I think this is a nice example here. It happens twice, right? So we see pull back into the EMA clouds, close back outside the EMA clouds, and then we can actually take that to the next level. We can scalp it to where the initial pivot was. A good example is this happens again here off of 2 inverted hammer rejections, I guess 3 there, and then we can enter, right, looking for a push into the original pivot point, which happened right here, and then you can see you can scalp there, etc. So Hopefully this video has been helpful to you guys. I wanted to make a much longer in-depth video. Yeah, have a good rest of your weekend.